It's trading. I'm making this video today to talk to the traders out there that are struggling. You guys need to come over here to Black Edge. You can find us on Instagram at Black Edge Trading all together. We have courses available on Teachable. We've cut the prices in half. We also have a 25% discount code. If you type Black Edge all together in the coupon area, it'll give you 25% off of these courses. This is our number one course. It teaches our trading strategy, mastering supply and demand trading. With this, you'll be able to follow along what we're doing in our Discord. This also comes with the course. We don't just leave you out there. I'm available every day for questions or anything you need. If you have questions about a trade you're in, or you want to follow along with the trades that I'm in and what I'm looking at for the day, I'm available. So, message to the traders. Let's go look at a chart. My message to the traders is you guys need to slow down. You don't have to trade every day. I know you guys have this idea of I need to make X amount of dollars a day. You need to change that goal into a weekly goal or into a bi-weekly goal or a monthly goal, because trading every day, you're going to get stuck in situations and losing capital because price is in no man's land. But you feel like you have to trade. But you're not looking at the overall context of the market. And I see this a lot. People miss moves. So, like, if you look, the people that missed this move on Thursday, they traded this move on Monday, where price wasn't doing anything. It was in no man's land. They traded this. They traded a 10-point spread. Well, by the time you get confirmation to get a good entry, price has already moved down 3 or 4 points. Now you're getting a late entry, and you end up stopping out. What your risk reward doesn't make sense. You never hit a target. So the people that traded that, they didn't want to trade today because they said, okay, well, price isn't favorable. We don't know where these levels are. I'll just, wait for this, wait for that. But if you stop trading the chop and only wait until the market presents a 20 plus point gap where you can trade between supply and demand, or demand and supply, then you'll be a profitable trader. Today we had a 40 point move. 40-point move. You can catch, 15 of these points or 20 of these points or maybe even 30 of these points. I called it out today in the Discord. I told him, I said, if we open up under 4,500, I'm looking at this 44.91 demand. And if we break below that, I want to take it down to 44.74. In the main chat, you can look at timestamps and you can look at the times. I said if we offer below 44.90, I'm looking to play puts. So we went below. We were having trouble getting above 44.96. I took it short. We got below 44.90 and we started selling off. I knew my target was 44.74, and I wanted to see how price reacted when we got there. I ended up, as we were coming down, I saw it was a large order sitting at 44.71. That was going to be the liquidity area. And that's what happened today. If we go down to a 3-minute chart, which I trade on, we can see what happened today. We opened right here at 9:30. Price was below what I said in pre-market, below the 4,500. So I'm looking to take puts. I told them at 8:30, which is 9:30 market time. I'm in Central Time right now, so at 8:30 is their 9:30. 8:32, I said if we get below 44.90, I'm looking to play puts. I end up entering on this trade right here. We had buying volume come in, it entered, and buying volume got rejected by engulfing. We got a basin engulfing. This is a great area to place a trade. Place a trade, I'm risking 3 to 4 points. If price gets above 44.96, I'm out the trade. My target is down here at 44.74. I take the trade down. When we get here, people start taking profit and price starts moving back up. It moved up to like 44.81, but I still knew we still had this large order sitting down here at 44.71. And I said, that's my new target. I'm going to wait and see how price reacts when we retest 44.74. Because I know if somebody was really buying here, it normally hits and then it retests in order for them to get their order filled. So it hit here. We still had selling volume and we had some smaller buying volume coming in. So I knew this was people taking profits. I stayed in the trade. As you can see, I said I'm still holding, waiting to retest at 44.74, and that was at 9:18, 9:17, which would be 10:17. And you can see right here, we hit 10:15. I said I'm waiting on a retest. 10:18. Boom. We come back down. We retest. We break through that level. We hit the 44.71. Break through it. People start taking profit. Come back down. Retest. We consolidate. I ended up getting stopped out of this trade for a profit though, because I moved my stop loss up as price comes down when I'm in puts. And I said I wanted to keep price below 44.71. Price didn't stay below 44.71. When people started taking profit, it got above right here and it stopped me out. Later, I entered another trade, getting short again here, looking for 44.63. The reason I chose that number is because we had a large order sitting down here on the market. The market was looking for liquidity today. So it was gravitating towards the large orders. So I ended up getting stopped out of the trade I took, trying to go short. But then I re-entered, and we were able to hit that second target of 44.63. We got $1 below it. Let that order get filled, and I say right here, we hit the target at 11.49, which had been 12.49. See what happened to my charts. What just happened? There we go. So you can see, let me get back to that chart. Is it other windows open? As you can see, sorry about that. As you can see, we ended up hitting that target at 12:45, and we were there at 11:49, which is 12:49 when I sent that message out. in the Discord. I'm just on Central Time. But I'm telling you guys, if you guys want to be profitable traders, get this course, come trade with us. But you have to make a decision like that you want to be a trader. Trading isn't always easy. The market presents different opportunities, but you have to study the market. You don't always want to, have someone that has to coach you through. So I try to teach people where they'll be able to make trades on their own and see these things based off of what I've taught them. Um, see these opportunities. See that price isn't bouncing here. That we had a massive sell off, and we go back up and retest supply and sell off again, and then prices consolidate. That means the market's confused, no buyers, no sellers. This kind of stuff, when it's consolidating, you don't want to trade. Then we move back up, we hit another supply, it starts to sell off overnight. We open below my level, which was basically the sand in the ground. If the market was gonna be bullish or bearish, just from watching the market, you know, the bulls want to keep price above 4,500. The bears want to keep price below it. They've been fighting over this area all day. So this is just something that you need to be aware of by watching the market. Like tomorrow, the Fed meeting comes out, and they're gonna try. The bulls are gonna try to get price above 4,500. If we can't, we're gonna be retesting these lower demands here and here. I'm gonna be looking to play these. So you just have to have the overall market context in your head. You don't have to trade every day. Only trade when the market offers you an opportunity where the supply and demand are far apart. I know this demand got formed today. It hasn't been retested to see if it's strong or not. So this could very easily break, and we could have a move from 44.91 back down here to this low. So this is another 30-point move opportunity that we have. Yes, I want to trade this tomorrow. We cannot get above 4,500 after the Fed has announced whatever they're going to do with interest rates. I definitely want to trade this. Quick money. So just stay patient, keep going, make the decision that you want to be a profitable trader. You have to cut all the other stuff out of your life. Not everything, but you have to commit to this. You can't just wake up and think I'm going to trade the market based off of candlesticks. You need to know where the buyers were the previous day. Where sellers were the previous day. You need to know where supply and demand zones are. You need to know what to look for after you find supply and demand zones, what to look for at them. You need to know if your supply and demand zones are strong enough. Do I need to play those levels? Is demand far enough from supply that I need to play this level? Is supply far enough for demand that I need to play this level? What is the overall trend in the market? Are we in the uptrend? Are we in the downtrend? What's going on? Do I need to play from supply to demand, or do I need to play from demand to supply? And that's gonna be determined by, is the market in an uptrend or a downtrend. If it's in a downtrend, you need to play from supply to demand. If it's in an uptrend, you need to play from demand to supply. These are things you have to think about. You need to learn about the volatility index and how the market has an inverse correlation to it. So if the volatility index is going down, the market doesn't have any pressure on it. It's going up. If the volatility index is going up, the market has pressure on it, and the bears love that, and the market is going to be going down. You need to pay attention to that. You need to learn about interest rates and how they affect the market. If I can get a 5%, 6%, 7% interest rate from buying uh, bonds or treasury notes from the government, why would I put my money at risk in the market if this is a guaranteed rate? Why would I put my money in the market to make 8% in an index and to pay a management fee or in a mutual fund? Oh, yeah, you can make it in individual stocks. True, that's true. But you got to pick those stocks and pick the spots of where you want to buy those stocks at. Because I know a lot of you guys are just going off of what you hear on the internet, on Instagram, and some of y'all bought up here because these Instagram gurus told you to. And you still been buying. You've been dollar cost averaging. But you don't know what you're buying or why you're buying. You just know somebody suggested to buy Apple because I got an iPhone or iPad. Okay, well, where was price? Okay, did you buy off a demand level? Did that demand level break? Why'd you not have a stop loss set? If that level broke, you could have got out with your money and bought it another time. That's how you buy. You don't buy and let the price fall and dollar cost average. There's no point of riding a stock down just to dollar cost average. You can stop out $2 if you buy these demand zones. Even if you're a long-term investor and I buy right here and price dips below here, I can stop out and take that $2 loss and have most of my money. And if I want a dollar cost, I want to buy at a lower price, I could buy the next demand zone. Okay, I don't have to ride it down 15, 20 points to dollar cost average in. And now I'm just, even though it's not that you're putting money into a losing trade, you're putting money into a losing investment and you don't have to. You can be smart about it. You're not paying taxes on a loss. I know they preach all that tax stuff, and yeah, I don't like taxes either. But I'd rather pay taxes because I got gains than take L's. So it's just a part of it. It's a part of the game. Okay? So learn this stuff. Learn how institutions invest. We don't just invest in dollar cost average. We invest in levels that we find attractive and we set a stop loss on long term investments. I'm not going to give my money back to the market. And the same thing in trading. It's just on a shorter time frame. And this is what I teach. I've had years, over a decade of experience in this market, in different markets. I know a lot of these guys just came out and they have experience in, the Trump era with low interest rates. And all you had to do is buy 0-day expiration calls and valuations were great. And all these companies were coming out with all these ideas and IPOs were coming out and they were pumping all this money into it just because it was an idea, but it wasn't profitable. And I mean, some of that stuff's still going on, but interest rates are getting higher. Money's getting tighter for people. They get less discretionary funds that they're investing in the markets. So prices are coming down. Valuations are getting better. They're not these crazy valuations where you're paying 60 times earnings. So just take a breather. Come over to Black Edge Trading. We'll teach you how to play these markets. I'll teach you how to invest. I'll teach you how to trade. And once you have this skill, you'll be forever able to produce money in the markets. And also, let me tell you, traders, this cash flow is important. And let me tell you why cash flow is important. You don't want to trade or invest with money that you need for bills and things. And this is something I learned back in college. My father used to tell me this all the time, and I never understood it. I would say, okay, if I'm good at something, why don't I use this money that I for other stuff that I need for other stuff to trade with? Because there's always a risk that you could lose money if you don't respect, even if you respect the risk to reward ratio, and you respect having a stop loss and manage that properly. There's still going to be some kind of loss taken. If you get in the trade, all trades aren't going to work out, but that's why we take high probability trades that we know this is a high probable level where price should reverse and go up or reverse and come down. And we learn how to read the markets properly. And if we're wrong, we take a small loss and we look for the next trade. But cash flow takes that mental edge off of you. If you're trading with your last $1,000, you're going to be more scared to enter trades. It's going to make you get in at bad periods. You're going to be chasing trades. It's just a whole psychological game that goes on with trading. And that's what we help with in the Discord. We try to help with that. I call people daily and talk to them about what their trading experience has been. What trades did they take? And I try to talk them back through it, like, why did you take that trade? What did you see? I want to know what they're seeing so I can try to correct it and tell them what I saw and what they need to look for. But you only get that from experience. And I've been there. I've been in bad trades that I let go against me. You know? It's just, you want to be right. You want to get your money back. And I've been there. But I just want you guys to, just think through these trades better. Don't trade on days when supply and demand are too close together. Don't trade on low volume days. Just sit out. Watch the market. Check in the afternoon after the market's closed. See what happened. See what levels are attractive for the next day. And then think up a trade. But stick with it and make a decision that you're going to be a trader. You can't be on the edge with this. Are you going to be an investor? Are you going to do both? But the market is not to be taken lightly. This is your hard-earned money that you're putting out here to make more money, and it's very possible to make more money and to make more money fast. And it's also possible to lose money if you don't have, and lose, money that you didn't want to lose if you don't have the proper risk management. And I know that sounds scary, but with the proper risk management and proper stop losses, once you learn how to place those and where to place those, trading is fairly easy as long as you put the time in to plan out the trade. It's not hard to be successful, but a lot of people lack the mental discipline to do it. It's almost like being a salesman, and they give you this catalog of high probability people that will buy your product. And yeah, you may get 20 no's before you get a yes, but those 20 no's may have taken up 2 minutes of your time. And then that yes may take an hour to complete, but you get your commission at the end, and it makes up for all those no's. And that's how trading is. You have to look at it like that. But anyway, I'll try to do these weekly. I'm also going to be posting content because I think a lot of a lot of people have investing questions um, that they would ask an investment advisor, and I'm gonna try to get some of those questions answered. So I'll be doing some more content on that, and still do content on trading and trading psychology and plans that I have for the next day. So just stay tuned. Please like and subscribe. Check us out on Instagram. Check out our page on Teachable. The link is on our Instagram page. And check out our YouTube, which you're at now. All right, peace. Till next time.